Ladies and gentlemen, good day and welcome to Tcpl Packaging Limited's earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you.
Thank you. Good afternoon, everyone, and thank you for joining us on Tcpl Packaging's Q3 and 9M FY'24 earnings conference call. We have with us Mr. Saket Kanoria, Managing Director, Mr. Akshay Kanoria, Executive Director, and Mr. Vivek Dave, GM Finance of the company. We would like to begin the call with brief opening remarks from the management, following which we'll have the forum open for a question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Saket Kanoria to make his opening remarks.
Good afternoon, everyone, and thank you all for joining us on our earnings call for the period ended December 31, 2023. I trust all of you have had the opportunity to go through our results shared with you earlier. I will initiate the call by taking you through our business highlights for the period under review, after which we will open the forum to have a Q&A session. In recent quarters, our company has demonstrated remarkable resilience in navigating through the challenges in the domestic market. This period saw subdued demand growth, particularly in the liquor segment, due to decartonization, along with a notable decline in raw material pricing. Despite these factors, our performance in export and growing contribution from the flexible segment has supported overall growth in the first 9 months. The impact of reduced volumes post-festive season has been notable, especially affecting growth in Q3. On a consolidated basis, the Q3 FY'24 revenue decreased by just under 4%, standing at rupees 363 crore. However, in 9 months FY'24, our revenues expanded by 5% year-on-year to rupees 1141 crore. On the profitability front, though, we reported healthy standalone EBITDA of rupees 59 crore, leading to a healthy margin of 16.6%. The performance of our subsidiaries, Tcpl Inofilm and Creative Offset, adversely impacted our consolidated margin. As a result, our consolidated EBITDA stood at rupees 55 crore, with margin at 15%. In the Tcpl Inofilm vertical, we have encountered certain setbacks on our new blown film line. Our internal team, along with the machine vendor, are actively working towards addressing these issues with a resolution anticipated in the next few months. However, despite these setbacks, we are making good progress in the development of sustainable packaging using our MDO PE film. This initiative has successfully supported one of the world's largest FMCG companies in introducing their first fully recyclable MDO-PE monopolymer pouch for their tea brand in India. Regarding Creative, while domestic electronic demand has remained subdued, particularly after the festive season, the vertical has successfully secured many new customers, contributing to encouraging year-on-year growth. Recently, we acquired the remaining stake in Creative from the previous promoter, achieving 100% ownership. We remain confident in Creative's huge potential despite the near-term challenges. As we actively work on scaling its operations, we expect a positive contribution to our profitability from next year onwards. On the operational front, we are pleased to announce the successful initiation of our third flexible line at our Silvassa facility. Incorporation of a new box rotogravure press into the flexible packaging unit in Silvassa complements the existing 2 lines. With the addition of this state-of-the-art printing press, along with other balancing and post-press equipment, we have significantly increased our production capacity for flexible packaging. In conclusion, we are actively broadening our reach through customer and sector diversification. Despite short-term challenges, we maintain a positive outlook, recognizing the structural growth trends in Indian manufacturing sector, including packaging. With investments in enhancing our capabilities within both paperboard and flexible segments, we believe TCPL is well positioned to leverage this opportunity. On that note, I would request the moderator to open the forum for any questions or suggestions that you all may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, on the creative side, I understand how the predictability of the rest of the business, but on the creative side, what are the factors that particularly drive this particular business? And going forward, what is the at full capacity, what will be the revenues that you would be able to achieve here, and are there any CapEx plans on that side?
Hi, I'm Akshay. I'll just answer that question. So what drives the business, I didn't understand clearly, but I think basically you mean like what's the industry like, or?
So basically, actually, what I was asking was, looks like from whatever numbers that have been put out, the contribution from creative side, at least on the revenues, seem to have almost halved as compared to the last quarter. So I'm just wondering, exactly. Yeah.
So your line is a bit unclear, but that's not correct. The revenue of creative is growing in double digits.
20%.
Yeah, by high double digits. So there's growth. There's no concern in terms of growth, but it's still at a low base. So the overall business still has a long way to go. And as far as the industries that factory mostly targets the electronics business, but we have made some headway with FMCG and cosmetics and food and those kind of customers as well, where we see in long term there being a very good growth potential as those brands start premiumizing more and more. So I hope that answered your question.
Capacity and CapEx.
On the capacity and capex, on the capacity side, we have enhanced substantially the capacity since we took over the factory, and we recently, did a major renovation to the plant as well as upgradation of the printing equipment. So we have enough capacity now to go into triple-digit figures, because basically this kind of product line, there's a very big variation in the value one can output on the machines over there based on the quality of job, because you can do a box of 250-300 rupees also, you can do of 20 rupee also. So the capacity does not vary that much. It's not like the same kind of way of working.
And just to add, the creative has achieved a 20% growth on top line in the current year. So
yeah.
For this particular quarter, what would be the revenues? Can you please outline if that would be possible?
So we don't give the quarter-wise revenue for the subsidiary company, but there is a high double-digit growth.
That you are saying for the 9 months number, right?
Even for quarter,
even for quarter,
it's 20%
plus growth.
Plus.
Yeah.
Okay, and any CapEx plans next year on the creative side to further enhance the capacity, or
nothing really now.
Nothing significant.
Yeah.
Okay, I'll get back in the.
Thank you.
Thank you. The next question is from the line of Vipul Shah from RW Equity. Please go ahead.
Thank you for this opportunity, sir. For the first time, we are seeing actually a sequential decline in the trailing 12-month revenue and the EBITDA, although, gross profit has shown a minor growth. If I read your comments, sir, in the second quarter, you mentioned there was good volume growth. So just wanted to check, sir, in this third quarter, how much of a volume decline have we seen?
Actually, I don't, if you're saying trailing 12 months we are declined, we have not declined. In fact, if we talk about the current year, in 9 months our revenue has grown 5%, firstly. But there's another matrix which I would like to add, which is the net conversion revenue, because what's happened is that the raw material prices in the current year have gone down compared to the elevated raw material rates in 2022. And so if we see the, in the FY'21-22, the company had a revenue of 1,055 crore, which grew 32% to a revenue of 1,400 crore in 22-23. And on that base, we are now 5% up. However, the net conversion revenue last year, that is FY'23, grew 37%, while revenue grew 32%, net conversion revenue grew 37%. And in the current year, the same rate has been maintained. So what we are seeing is that the top line shows that the growth is very moderate, but that is essentially out of raw material pricing correction because the international prices of all feedstock has gone down significantly, and that has affected our revenue obviously, because paperboard price and polyester film and BOPP and all substrate rates have gone down significantly in the current year.
No, that I understand, sir. So is there, in this third quarter, is there any volume decline we've seen, sir?
Volume is basically flat in the third quarter. Yes. That's basically after Diwali, where the demand growth has been very subdued.
There was a lot of inventory in the pipeline at our customers' end, so the offtake was more subdued than effective. Every year after Diwali there's a bit of a hangover. This time it was slightly worse than usual because there was a lot of stock in the system. But that's bouncing back this quarter, what we see.
Yes.
Yeah, because, generally also if I read the MD's comment that this liquor decartonizing has also been an issue. Because generally third quarter, and you see the results of the liquor companies also, so they have actually reported pretty decent numbers. So just one question, sir, which I had is that is this liquor decartonizing a temporary setback, or in your view it is a much more secular shift to maybe other packaging materials?
I mean, right now the liquor companies is not moving to any other packaging material. They are selling the bottle without the packaging at all. And this seems to be a decision taken by these two global multinationals. Except for limited edition packs for which they still buy some packaging. But yes, it's a big decline. And now how much time it will continue for, or whether it will continue forever, is something, very hard to predict at this. Obviously, we would like them to come back, and consumers, ultimately it's to be decided by consumers and how they perceive the, the product. So it's a bit early to comment on that. But for us, it's a very big impact, because while our 9-month growth has been 5%, let's say if liquor was not declining the way it has, we would have been a very comfortable double-digit growth.
Got it, sir. And so last, if I may, is that have we also seen some slowdown in the exports this quarter specifically, and going forward with the geopolitical disturbances which are there, do we see envisage a more subdued export potential?
In export, the challenge, of course, right now, which is for the last 6-7 weeks, is this crisis in the Red Sea, which is pushing up sea freight and also the time to market. But otherwise, export has performed all right, and going forward also, we don't expect any big change. Of course, if the Red Sea continue for another 1 year or something like that, then that is bound to impact all companies and all types of products.
Thank you so much, sir, and I'll come back in the queue.
Yeah.
Thank you. The next question is from the line of Saurabh Datta from Minerva Asset Advisors. Please go ahead.
Thank you for the opportunity. So just for
Can you can't hear you. Yeah, can you speak up, please?
Yeah. Am I audible now?
Yeah, little louder.
Yeah. So thanks for the opportunity. So just for housekeeping, I wanted to understand how did the EBITDA per converted ton move in the standalone business?
So converted ton, we don't really measure that matrix, but you must have seen the data in terms of percentage of revenue, which has in fact increased in the standalone company.
Right, but revenue might have noise in terms of how paperboard or plastic is being priced, which is why I wanted to know this metric.
Right, but per ton is not, we don't look at that way.
Right. Okay. So again, would it be possible to break down the revenue decline in Innofilms and the Tcpl business by volume and pricing?
No, that's not possible to do that. Again, it's not homogeneous material. There's no revenue decline though in either of those two companies.
Okay. Not even for the quarter in particular?
Yeah. No, not even for the quarter.
Okay. And finally, can you quantify the expected revenue impact in FY'24 from decarbonizing the spirits industry? And also, would you expect to see more of this in FY'25? That's the last.
I think the FY'24 has borne the brunt of the decline in the carton, decartonizing for the liquor. So in FY'25, the starting point itself is low, so we won't see any further decline.
All right.
Yeah.
Understood. Thank you.
Thank you.
Thank you. The next question is from the line of Jainis Chedda from Spark PWM. Please go ahead.
Can you repeat the name, sir? Sorry.
Jainis Chedda from Spark.
Spark. Okay.
Good afternoon, sir. Am I audible?
Yes.
Yeah. Good afternoon, sir. I'm Janice Cheda from Spark Private Well. We already covered Tcpl packaging. My more than question, I would like to give a suggestion or a feedback that since now we have started a third flexi packaging line as well, can we get a quarterly breakup at least in terms of what is our flexi revenue versus our carton revenues on a quarterly basis? And how much is our export revenue versus domestic revenue on a quarterly basis? Is it possible to incorporate that in our quarterly presentations?
See, we'll consider your suggestion, and our presentation is quite elaborate in any case. So we'll discuss and we'll see what to the extent we can share.
Yeah, thanks very much for your coverage and interest. But the competition is all private. All are looking at our numbers, and few will be attending these calls also. So, as we have to balance the info we share and what we don't share.
I completely understand the privacy aspect of the business, but still some directional data will help us understand a bit more. Secondly, my question is to do with employee cost, which has gone up. So any particular reason?
Employee cost.
Employee cost.
Yeah.
And any particular reason behind that?
Employee cost has gone up in line, with the big increase in minimum wages in the current year. There's been unprecedented, almost 15% increase in minimum wage almost across all our plants. So that is one factor. The second is, of course, the annual increments, and the third is some increase in headcount because of the higher capacity which has been created. So while the revenue has gone up 5%, employee cost has gone up, I think, 14-15%. But it's a base for the future, really. We should be able to normalize that.
Okay. Thank you so much.
Yes. Thank you.
Thank you. The next question is from Nikhil Shetty from Nuvama Wealth. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity. So, sir, as per our understanding, export growth pace was slow during Q3 when we compare it to Q1 and Q2 this year. Plus, I believe, as per our calculation, around 8 to 10% kind of a domestic business degrew this quarter, maybe because of the volume or the slower second half of this quarter. Is it a right understanding?
The export has not grown in Q3 compared to Q2. That is, you're basically on the right track, maybe by a quarter or so, the difference. But the domestic has not declined really. The total is about flat in the current quarter. Total revenue.
So is there any seasonality in the export market, or is it because of a base or due to some Red Sea issue?
There's not any major seasonality, I would say. Unlike in the domestic, which is quite seasonal nowadays because of the Diwali, lead up to Diwali is generally more buoyant. In export, we don't find any such, event as such.
And sir, is there a base left due to cartelization in Q4, or it is already done? Like now we are at a break even, and Q4 will not see impact of decartelization base.
Yeah, Q4 will see much lesser impact of decartelizing because decartelizing started from July, August 22, and then it slowly the impact came. So we've seen the brunt of it, and in this quarter, current quarter,
still there will be
some impact,
but probably from next year, I guess, it should be normalized.
Next financial year will be normal.
Yeah.
Okay, Q1 onwards, you're saying?
Yes.
Yeah.
Q1.
Yes.
Okay. And sir, during your opening remarks, you mentioned about adding a new customer in InnoFilms. So what kind of opportunity we can expect from this particular customer?
So what I mentioned is that we have launched this fully recyclable packaging made out of the film from InnoFilm. InnoFilm has got great opportunity, but we had some challenges on the technical side with the equipment, which we're working towards a settlement with the machine supplier. But yeah, there is overall, I think it's if you ask me, would you do the investment again? I would say yes, because that is the future.
Right, but how we are going to serve these customers then?
We are producing the machine is in operation and we are able to manufacture the material. The only issue is about the wastage and the productivity, which should be better than what it is.
And sir, since the installation of this machine, we are facing lots of issues.
Yes.
And I believe in last 1 year, you guys are trying hard to, stabilize and get a desired output, but it is still not able to achieve. I know this is the new technology, but still, by when we can expect these all things get settled?
We are quite hopeful now that in another month or two, it should be normalized, because a German company has found out the root cause, and they are sending us the requisite parts which will be changing, as also they have modified some software. So they expect that they will be able to put this right, and then we have to discuss with them the compensation for the losses incurred by us.
Okay, sir.
Yeah.
Good to hear that.
Thank you very much.
Thank you, sir. Thank you, sir.
Thank you. Next question is from Bhavesh Jain from DB Investment Advisors. Please go ahead.
Hello, sir. Thank you for the opportunity. So we saw a sequential debt reduction on quarter-on-quarter basis by 40 crores around to 487 crores. So what is the year-end figure we can expect?
So the debt comprises of working capital and term debt.
I'm talking about the net debt figure you have mentioned in the...
The net debt. Year-end figure compared to the Q3 figure, I would say there will be, it should be pretty much little lower than the Q3 figure, I would say. Because we have some repayments in the current quarter, and drawdown on new debt in the current quarter is going to be very marginal, because our capex for the current year is almost completed. So there's no new capex really in this next 2 months.
So are we targeting for any aggressive debt reduction further ahead?
No, we are not targeting any aggressive debt reduction, because we have, as you know, we have a constant growth target, and therefore we continuously expand capacities. And this current year, we've added 4 new printing lines, which is quite unprecedented. So it depends really on how much is the potential to grow, and basis that capex is going to be planned.
Okay. And my second question is regarding the Tcpl InnoFilm. So we have seen some operational issues from past 3 quarters. So just wanted you to touch upon what kind of revenue potential we can expect from this subsidiary.
So this subsidiary firstly is getting merged into the parent company, and NCLT has now passed an order, and we hopefully it will happen. So the revenue will get merged, and essentially the film produced of this is going to be used in-house only. So it's not that we are going to sell too much of the film. So the potential is to replace raw material which we buy today with our own film.
So I just asked because in Q2 we mentioned that we will start supplying to third parties.
We do some film sale, but the focus is to convert on it, and to make it into the packaging.
Okay. And my last question is regarding we saw other income of around 7 crore this quarter. So what is it about? What is the nature of it?
That's all operational other income, like export benefits and scrap sales, etc. So this is a pretty normal figure.
Okay. Thank you so much.
Nothing exceptional.
Okay. Thank you.
Thank you. Next question is from Harshil Sethia from Ladder Up Wealth. Please go ahead.
Hi, sir. Just wanted to confirm a news. Is there any news that Borkar Packaging is under the weather?
I don't know. I can't comment on this. They are very much in business.
We don't like to comment on competitors on these calls, but
under the weather, we don't know.
I don't know. Yeah.
Okay, cool. Thank you.
Thanks.
Thank you. The next question is from Resham Jain from DSP Asset Managers. Please go ahead.
Hi. Good afternoon, sir. Sir, I have just one question. In terms of capacity utilization, where are we currently, both in carton as well as in flexible? And with the addition of new lines this year and films plus creative further getting added, will get ramp up, let's say, next 2-3 years. So what kind of growth one should expect at a consolidated level over medium term?
I would say that hello Resham, how are you doing?
I am good, sir.
Yeah, we are, I would say, around 70-72% capacity utilization in the currently. And I would say that we should be able to target to go up to 85-90% ideally. And yes, creative has the potential to, increase its revenue almost 50% from current base. Film, as I said, there's not much revenue generation there because it will be more a substitution of our raw material. And on the other side, you can say that from 70, 72, if we go up to 90, that's the headroom we have with us. So overall, I would say 20-25% headroom for growth based on current capacity.
Okay. Understood, sir. That is the only question I had.
Yeah,
Thank you. All the best.
Thank you. The next question is from Riya Mehta from Equitas Investments. Please go ahead.
Hello. Thank you for giving me the opportunity. My first question is in regards to the raw material. You've been saying that the prices of BOPP and all those packaging material have gone down. So how are the prices currently in the month of January? Are we seeing a further decline?
No, in the month of January, in fact, the prices are going up a little bit because, again, this Red Sea is causing some disruption in their raw material. But it is not anything significant. It's a marginal increase.
Just to add on that, basically, I think we are at the kind of bottoming out of the RM pricing. Now it should start going up slowly, basically.
Got it. And in terms of, hello?
Yeah, go on, please.
Yeah, in terms of flexible packaging, as you said, that we have a headroom for 20-25% growth. Do we have any further capacity of brownfield expansion post this?
No, right now we have completed all our current expansions and nothing immediate on the anvil.
And currently the utilization level of 70-72% is for the two lines, right?
No, we are talking about for the company as a whole.
Okay. And for flexible as a segment, if you could help me.
So in flexible, we used to have two lines. The third has just got commissioned. So the capacity utilization there is obviously lower, and there's a big headroom there.
How much that would be?
That would be about.
I think that will become 30% of the total capacity. So that's all free right now.
Yeah.
Plus little bit from the last two lines.
Sorry, I didn't get you.
Basically, the third line has just been commissioned.
Yes.
So therefore, the capacity utilization in the flexible, considering the third line, is lower than it is in carton. But the third line has just got commissioned as we speak in the current, in January month. So
sure. And my question was more pertaining towards the existing two lines. What would be the capacity utilization there?
Yeah, it was obviously 80+%. Otherwise, then we wouldn't have put the third line.
Got it. And in case you want to put a fourth line, is there a possibility?
Yeah, there is a space available if that's your question.
That's the question. Thank you.
Yeah.
Thank you. The next question is from Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, what would be the capex plans going forward? I mean, since we have already made the additions, do we see any CapEx plans in near term, or how do we look at that?
So in the next financial year, we haven't yet formed up our CapEx plans, but they are kind of moderate. There's not very heavy CapEx next year unless something new comes up.
Okay. And to fill this new flexible line capacity and also the paperboard capacity which we have got extra, how much time do you envisage it will take us?
This is an ongoing activity, so it will take a couple of quarters at least. But I mean, you will see better performance as we go along.
So, are you saying in couple of quarters full utilization?
No, not full. I'm saying there will be a gradual increase. It's quarter on quarter.
Okay. Sir, can we expected more than double-digit growth at least for the next year? How do we look at that?
Our target is always to grow double-digit, and certainly we would feel let down if we can't do that.
Okay. And one last question, sir. Do we think our current margin levels are sustainable, at least on the EBITDA margins?
You have to see our data for last few years to answer that question.
Okay, fine, sir. Thanks.
Thank you. Next question is from Pulkit Singhal from Dambis Capital Management. Please go ahead.
Thank you for the opportunity. First question is on the domestic side. I mean, what is the potential for market share gains going ahead here? I know we have been gaining at a certain rate out there. One of the key competitors has also been growing quite rapidly. I'm just wondering if you could share some initiatives or some white spaces, or do you see some areas of faster growth than whatever the market is performing?
Hi, Pulkit. I'll answer this question. See, specific segments I won't get into, but there are many segments where we have very limited presence still, and or we have no presence also. There are some geographies of the country where we have no presence. So in these segments and these geographies, there is always a scope for us to grow in future. And there is our general customer growth, which has been very subdued these last few years, and we expect or hope rather that it should improve. And further, there is a premiumization and value addition in whatever we do, so that also adds on some growth. And yes, there is always further scope even within our existing customers to add more share. Now, about the competition, certainly people will try to grow as fast as they can, but it's our job as responsible stewards of the company to ensure that we balance that with the sustainable kind of margin profile. So definitely we are not in the business of losing share of business.
But the point is that if the basic underlying market doesn't grow, then even no company can beat that. Ultimately, it depends on the overall market.
Yes, I mean, I guess your ability to increase share is also better when the market grows. I mean,
yes.
In a declining market, it gets tougher. Okay. And secondly, on the creative side, I mean, good to know that you've increased capacity. I mean, what is the peak revenues which is now possible from the enhanced capacity?
Basically, as I said earlier, it can go to triple-digit crore revenue, but it really depends on the product mix, because in this rigid box business, it's dependent on the kind of job that you get. So the capacity figure per se is not really very meaningful.
Understood. You had this target of 100 crores for this business.
Yes, and we continue to have that.
Any sense of like how many years it might take before we reach there?
No, but it's growing every year, so the rate of growth is, it's a very low base, so
okay.
Really one or two customers can really boost that. performance up.
Right. And last on the exports bit, any update? I mean, I know you were targeting the U.S. market, and you're also trying to build up the sales to address various other, markets. Any update out there? And, I mean, are you seeing some of those conversations convert into orders, or what are the concerns that you might have?
Oh, it's a work in progress. It's constant effort is going on, and overall, no concern as such.
It's positive overall.
Yeah.
All right. Great. Thank you, and all the best.
Thank you. Thank you very much.
Thank you very much. As there are no further questions, I would now like to hand the conference back to the management team for closing comments.
So thank you, everybody. I hope we have been able to answer all your questions. Should you need any further clarifications or you would like to know more about us, do feel free to contact us or CDR India. Thank you again for taking the time to join us on this call, and look forward to interact again with you all in the future.
Thank you very much. On behalf of Tcpl Packaging Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.